Is the individual investor getting into this market or getting out? I'm not quite sure. So I'm going to ask the guy that knows better than anybody, Dan Greenshields. He's the president of Capital One Sharebuilder. He's going to sort it out for us. Welcome, Dan. Please tell me, what's the little guy doing right now?
You know, actually, we've seen January is a really good month for Capital One Sharebuilder. We actually saw we had a record in cash inflows. We also outperformed all of our industry competitors in terms of trading versus last year and the previous month. So we actually are seeing an uptick despite all the sequester talk.
Do you think that the sequester talk is going to scare a lot of people out? Because certainly when they had that debt ceiling debate, that scared a lot of people out of the market.
The debt ceiling, I think, was a far more severe because it was a downgrade, actually, the notes that they sell to investors, both U.S. and foreign. This is an internal debate about what, obviously I think the government can find 3% to cut. Everybody can always find 3% in their budget to cut. And this is a plan, and it wasn't a surprise. This is one they came up with 2 years ago. So.
And how do you know that the so-called little investor, the individual investor, is getting into the market? Because we've had a nice little run up. Clearly the hedge funds are active. But how do you know about smaller people?
A lot of them still are on the sidelines. They still have big cash balances. We're seeing gradual, like I said, in January we saw the best net inflows of cash. I kind of measure dollar flow. People vote, versus a survey, they actually vote with their money. And when I see the inflows, net inflows pick up and outflows stable, that tells me that we are seeing some return to equities, which is good. People are going a little bit more, the 10 basis point yield they're getting on the money market isn't quite as exciting as it was when they were really fearful. I think they are seeing opportunities for investments.
Quick question before I talk about Apple, because you got to talk about Apple, because to a lot of people that's the market. They're talking once again about a tax on financial trading in Europe. People don't want that over here. What do you think would happen if we instituted that over here?
We operate an entirely different system than the Europeans. The Europeans certainly have a little bit more control over their markets, a little less free market as we have here in the U.S. So I'm not a proponent of that. I believe that with the proper what I'll call circuit breakers, that our markets work quite well. We still have the most efficient capital system in the world in terms of raising capital for growth companies. We still have a very healthy capital formation all the way from venture all the way up to Fortune 500, and companies like Apple benefit from that. Whether they're large or whether you're just your first time company issuing an IPO, our system is still the most liquid in the world. All
right, now let's talk about Apple. Your site has a heat map on it. How hot is Apple on your heat map right now?
Well, it's taken a bit of a hit. The heat map is pretty cool, so it allows you to look at any index, whether it's the Russell, the NASDAQ, or the S&P 500, and see what sectors or individual stocks are both positive or minus, either on that day, that week, that month, that year. And it shows, the bigger the square, the bigger the market cap of the company. So obviously Apple and Google are massive squares versus some of the smaller ones. And if they're underperforming, they're red, and if they're outperforming the market, they're a green. So it's a great way to get a visual snapshot of the market.
All right, and finally, what about your sector, the online brokerage sector? How's the competition there?
It's been a pretty tough business with the low volumes the last couple of years, but volumes have picked up. We're actually pretty excited to be making a change that we're going to simplify our pricing structure, and we're going to move to kind of a flat price for all real-time trades at $6.95, which will be one of the lowest in the industry. And we're going to do that this week. So it's pretty exciting news for our customers, and we're excited to simplify and make investing easy for them. And mobile is another big trend. We're seeing about 15% of our activity coming through either iPads, mobile devices, whether it's Android or iPhone devices.
And maybe if people are freaked out about the sequester, this lower price will get them back.
That's right. It's a better way to trade.
Thanks a lot, Dan Greenshields, and thank you for watching The Street.